Welcome to the next episode of the Betterwallet podcast. On this episode, we're going to sit down with my good friend, David Pere, and we're going to talk more about the real estate market, the current real estate market, which I agree has been very confusing. But it's time for us to know if it's time to jump into the market or if we should wait on the sidelines to, try to see if interest rates might fall or housing prices go up. So we're going to talk about that during this episode. The reason why I wanted to bring David on the line, not only is he an ex-Marine, but also he built his wealth through investing into real estate. He has real estate properties all across the country. So he knows a thing or two about, teaching people how to invest in the market. So during this episode, what we're going to talk about, we're going to talk about the current state of the real estate market. We're going to talk more about how to evaluate investment properties, real estate properties, and then also we're going to talk about how you can find the best lender for you and the best lender for your family. And then we also will talk about why family might not be the best choice if you're looking for an agent or a lender. So more on that in this episode. That actually caught me by surprise when he brought that up, but the way he explained it made complete sense. So let's go ahead and jump into the episode, and I'll catch you on the other side. With that, we're going to get into the episode, and I cannot wait to see what comes out of it.
Welcome to the Betterwallet podcast, a podcast where we talk to everyday people who have changed their lives through managing their money. We talk about their money journeys, the good, the bad, and the ugly.
Welcome, everyone, to the Betterwallet podcast. As you guys know, Betterwallet podcast is all about demystifying the topic of money and sharing powerful money stories from people who truly beat the odds. Today, we have David Pere on the line, founder and owner of From Military to Millionaire, and a fellow podcast host. You guys will see it on YouTube, but he has this amazing setup. I'm incredibly jealous, and I need to work on mine because I have nothing when it comes to my setup, but like a really nice blue light behind me. So we'll work on that. But today we're not going to talk about the blue lights. We're not talking about podcast setups. We are talking about real estate. But first, welcome, David. Welcome to the podcast. And I'm excited to talk about real estate and how people who are first-time home buyers can get into this crazy market.
Yeah, thanks for having me on the show, brother. It's been a good time.
Absolutely. So a little bit of a backstory. You're probably like, how the hell do you guys know each other? We met at FinCon. So, they have these round. So for anyone who doesn't know what FinCon is, it's basically a conference for finance nerds like us, where we all come together annually in, various different locations. Where I met him was in Austin. Last year was in Orlando. This year is going to be in NOLA, New Orleans. But anyhow, we come together, we talk about various different topics. And what I like about FinCon is that you can go and you can meet people that you traditionally probably would never have met. And David was having a roundtable about, a mastermind and how to build one. He has an incredible one for military vets or people currently in the military, right? So I sat down with him and I learned a lot, and we kept up that relationship over the years. So it's been dope. But as I mentioned today, I wanted to bring David on to talk about real estate, more specifically the current real estate market, which in my opinion is crazy. Like, I was looking at an article from the Wall Street Journal just today as I was prepping for the podcast, and I saw that like home prices in the West are falling and the home prices in the East are rising. So I'm like, what the fuck is going on? Right.
And home prices in the Midwest are just like, we don't know what the fuck we're doing.
Yeah, it's just like make up your mind, right? And me being a Northeast kid, but living in the Southeast, it creates a situation where I'm like, okay, well, do I jump into the market now? Which these are all things we'll talk about during the podcast. But before we jump into it, and I don't feel like we need this, but we're going to go through an icebreaker question that I did not prepare you for. So are you ready?
No. That's
all right,
the
cool.
whole point, right?
Perfect. I should mention that David is a Marine, though he's out of the Corps. He's a Marine, and he's probably prepared for anything that I throw his way. So Perfect. Thank you again for your service.
Thanks, buddy.
Here's a question. I love asking this question because it gets people thinking a lot. Right. So you have a cell phone, right?
I do.
All right, perfect. If you could only keep 2 apps on your phone, what would they be? And
why? That is a good one. Are we assuming that the phone call and text message apps are defaulted?
Yeah, you
Okay,
need those
because
for
those would be my
survival.
answer if not. In that case, I would probably go with my calendar. It would come down to one of three, and I'm thinking it would be Facebook, but it would either be Facebook, Instagram, or email, specifically Gmail. And the reason it would probably not be Gmail is because people reach me with a bunch of crap there.
Yeah.
And so I believe I would go Facebook and calendar. And the reason being that calendar is what I run my life off when it comes to my journal in the morning, right? Everything else I can run off my desktop when I get in the office. I can check email, I can check everything else. But calendar is what I need for my journal in the morning and at night to make sure I'm not missing things, dropping the ball on things. And Facebook, for those who don't know, my Facebook community is like the pride and joy of the military millionaire community. So being able to engage and interact through that and through my private community for the mastermind would probably be the most important piece of the business when I'm not attached to my office.
Wow. Talk to me about like the journaling. So is that something you do in the morning where you journal like what you plan on doing throughout the day? Or is it like a boom?
Yeah, I actually just created my own planner. I
Wow.
like it so much. If you've ever read like the Miracle Morning, I do kind of that type of thing, right? But I created this planner based on like 4 other planners that I've used. I kind of combine pieces. So I do like it's like a quarterly plan, monthly plan, weekly plans. Like Sunday, I'll sit down and do like, it takes like an hour, plan the week out, like the big ticket items I want to hit that week. And then each morning I sit down for 20, maybe 30 minutes and I write out, well, just to make sure I don't miss anything. We'll talk through each morning. I write out, the month and day, 3 things I'm grateful for, 3 things I'm excited for, what time I woke up, how many hours I slept, did I hit the snooze button, what my focus is for the day, what my exercise will be for the day, how I'm going to rejuvenate. So like for most of this week, it's been like a cold plunge or meditation. I have my top 3 goals, my weekly objective for those top 3 goals, my most important next step for those top 3 goals. And then I have a box where I say, if I do these 3 things, I win the day. Because we all have like that to-do list, like 10 or 20 things. And if you're anything like me, even if you got 7 of those 10 things done, at the end of the day, you're like, oh, I didn't get 10 done. Yeah. And so I put 3 of them down and I tell myself, hey, if I get these 3 done, then the other 7 don't matter. They're all bonuses. That gives you like permission to turn it off at the end of the day.
Yeah, I need that. Are you selling that?
yeah, it's on Amazon.
That's so good.
And then I have just like a time block. So like and this is the only planner that I know of that starts at 4 a.m. Most start at 6, but it's a bunch of military dudes. So I started it at 4 a.m. So from 4 a.m. to 10 o'clock at night, got a half-hour blocks, and you can just write in everything that you're going to do through the day. And then at the evening, it's got a spot for you to say, hey, did you accomplish your most important next steps? Write out your wins, what you struggled with, and then opportunities for improvement, how productive you were for the day, scale 1 to 10, and plans for tomorrow.
Wow. That's so cool. Yeah, I mean,
try to do that every day.
You mentioned, if you go throughout the day and you have 10 things on your list, you only cross off 7, you're, oh my God. That's how I feel. I feel that way every single day.
Yeah, I'm terrible.
And I use sticky notes. Like you can't see it on the screen, but like I literally have 20 here, like right below me. And I need to have a better system. And I think that's going to help me out. So I'm going to check it out.
I'm the same way.
There you go. Yeah, I could really like, if I lifted these up, I'd have like a full-blown workout. I actually needed to. I ran out of sticky notes today. So you have like the back of the sticky notepad and I had to get a new one. So, and I only use blue. I don't know why, but I only like blue sticky notes. It's just the weird idiosyncrasies of Mark. But today we're not talking about sticky notes. Today we're talking about real estate. And guys, I'll make sure that link is in the show notes so you can check that out.
I'll give you an unforgettable link at the end of the show.
Yeah, exactly. So we're going to talk about real estate. We went through the icebreaker question. So let's just talk about the current real estate market. It's sort of a fancy way of like asking that question, but I think what I really want to know is like, what the fuck is going on? Like, what is going on in the real estate market?
You and everybody else in the world. Here's the problem with that question and with the answer is that the answer is it depends. And what it depends on is where you live. And so it is hyper market dependent right now because what happened is rates flipped a bitch, right? Like they were like, everybody knows rates went from 2 to 7 or whatever, which for the record, for your audience, as well as everyone else, 2 or 6 and 7, 8%. Like historically, 6 and 7% is like median, right? That's not really that high. If you look at the 80s, they were in 16, 18% interest rates, right? So 6, 7% interest sucks compared to the last 3-4 years. And unfortunately, humans have fickle short-term memories. But like it's only 2-3 points higher than we were in 2015. And it's, still dramatically like half of what our parents paid when they were buying their first homes in the 80s, 90s.
Yep.
I mean, it's like half of that. So it's really not the end of the world, but it does affect buying power fairly significantly. And so when you mention like West Coast, East Coast, North Coast, South Coast, what's going on is like, let's say San Francisco, right? Median home price, $1.5 million. If you've got a buyer approved for 1.5 and it was a 3% rate, all of a sudden it goes to 7. Well, now they're only approved for 750 to $1 million just because of the interest rate. So now if your entire buyer pool in the entire market just went from, hey, most buyers are approved from 750 to 1.5 to, hey, most buyers are approved from 400 to 850, all your buying power just shrunk. So most people can't buy that 1.5 because what happens is most of these, generally speaking, buyers in like once you get past that like 1.5 range, the guys buying $2, $2.5, $3, $4 million houses are either coming in swinging massive down payments from a sale, or they're buying cash because they're loaded. They don't care.
Yeah, they're rich.
Yeah. So they're not usually the people affected. It's that 750, like 1.5 range where they have a little bit of cash, but they're still dependent on the bank financing. And so when all those buying power got compressed, now you've got a much higher battle for the lower end purchase price, but that 1.2 to 1.5 range seller is stuck. They either need to drop the price or they just hold the property. But they don't have to sell because they're locked into a 2-3% interest rate for 30 years. So they're not hurting on the property. But if they want to move, they either have to sell at a lower price or rent it because they can't. So it's a weird dynamic. Whereas, like Atlanta, growing population, trending upward, wasn't a super expensive market. It's getting more expensive.
Yeah, I wish I bought back in like the early 2000s.
Yeah.
When Lil Jon and Ludacris were taking over. I came to Atlanta. I was like, where's Lil Jon and Ludacris? And they were like, they don't live around here anymore. So, definitely late.
Yeah, but so that's kind of the thing, right? It's like, so like in Springfield, Missouri, like prices have pretty much stayed the same because going from a 3 to a 7% interest rate when your median home price is $220, those buyers probably only lost $10,000 or $20,000 at most on their buying power. It doesn't really affect the market that much. It's not nearly as much of a hamstring. So I've got houses that have sold, they've gone under contract like 24 to 48 hours after going on the market. Still, this past month, I've got a property I'm fixing to list hopefully next week. And I imagine it'll be sold, under contract within a week.
Wow. How many properties do you have at this point?
I think I've got like 8 actual houses, and then I have a hotel, 2 apartments, and an RV park, and then some other bigger apartments that I'm invested in. I've sold probably 6 houses this year, and last year I wholesaled or flipped 16 instead of holding on to them. And I had sold an apartment as well, and the 6 I sold, 2 were duplexes, 1 was a triplex, 1 was a fourplex. So I probably sold like 25 or 30 units this year. Just trying to, they were in rougher neighborhoods and they were more of a headache management wise. And so I had a lot of equity and I was like, well, let's move this money into nicer, less headachy neighborhoods.
Yeah. Playing real life Monopoly here.
Yeah. As you get more capital, your time and headaches become more valuable.
Yeah, there you go. Yeah, time is limited. That's great to hear. And guys, so you guys know that he's a real deal here. When you have a lot of properties, when you have to think about how many properties you may or may not have, you're like, 8, 9.
Yeah, I'm like,
I sold last year.
I'm like, I sold one 2 weeks ago. I've got one that sells.
Carry the one
in 4 days. Oh shit! I don't.
Guys moving and shaking on the buying and selling side. So David knows a lot about this topic. So let's switch over to the mindset of someone looking to buy. right? They're like, I want to buy, I'm ready, I've been waiting forever, COVID screwed up, whatever.
Yeah.
I want to get in, I want to buy a house for my family. Like, how do you go about evaluating properties? Like, what do you actually look for?
Yeah. The first thing, earlier you asked about like the market. The one thing I would say is definitely pay attention to population trends and employers. So, like if you're in a market where there's only one type of employer, like it's only cars like Detroit or only medical, like that's not necessarily something you have to be worried about, but I like diversity of economics, right? So just you can pull that data on citydata.com. You can just go there and it'll show you population trends. It'll show you median income, median house price. I mean, it shows you more data than you need to know, but it'll also show you like percentage of economic breakdown by employer, like what kind of employer brings what kind of business. And so just go and look and see like what sectors are bringing in business to your market. So I would go take a look at that. That's just good information. Not to say like you shouldn't buy a house where you live, but I would just caution that if the population's trending down quick and you have only one sector and that sector is moving elsewhere and you buy a house, it doesn't matter what you do when you're buying that house, it's going to lose money. Yeah. Like it is what it is. Yeah. That's why Florida prices are skyrocketing because everybody's moving to Florida.
Yeah, everyone from New York's moved down to Florida.
New York, California.
Yeah. Which, I mean, in my opinion, makes sense.
Like basically everywhere that voted blue is like, oh, wow, the weather and taxes are great in Florida too.
Yeah. And it's like, this was the same way prior to the pandemic, and now you're just now figuring this stuff out.
Yep.
So it's really interesting, like how the pandemic has helped people to understand the world around them and saying, okay, well, maybe I don't need to live in San Diego or New York, which happen to be the two most expensive cities in the country. Maybe I can move down to Tampa and buy a property that is likely going to appreciate because Tampa's been booming.
Yeah.
So you mentioned that you want to look at city trends, employers, industries, and things like that. You don't want to be, in your opinion, like, I guess Detroit's definitely going through a renaissance now, but
yeah, but for a few years there.
But for a few years, it's like caving in. Right? But what else do you need to evaluate properties?
Yeah, the question really comes down to like, I mean, if we're talking like for a family, you're buying a different house. Like my favorite strategy is the house hack. So I love the idea. If you're single or if you're like you and a spouse, I think your first property, the best way to just crush it is to buy like a duplex, a triplex, or a fourplex where you can live in one of the units, rent out the others, and the income from those other units can effectively pay your mortgage and potentially your mortgage, your utilities, your taxes, your insurance, and you can live for free, right? So you go from paying $2,000 a month in rent or in mortgage, principal, interest, taxes, insurance, to break even. And let's say you were paying $1,500 in rent and now you own a place where you live for free and you just save that $1,500 a month and invest it. Like that to me is the gangbusters, get rich fast, best starting strategy. But if you have a family and you're looking to buy an actual like single family house, forever home, that's a whole different story. So we'll go that way in a second.
So I hear that like a lot of times online where people will say, don't make your first home your forever home. Could you break that down for the audience that might have like heard that before, that maybe they want to start investing into real estate, but they've heard that and they're just like, okay, well, I don't want to buy my dream home as being my first home. Like I should get an investment property.
The reason I love that is because you can move more than once, right? Like you can use an FHA and then you can use a conventional 5% down, or if you're military, you can use a VA again, or a VA and then an FHA, or an FHA and then a VA. You can use multiple primary residence mortgages as long as you occupy the place as your primary. And so let's say you use a 3.5% down FHA loan. You buy this duplex, triplex, fourplex. You live in it. You house hack it. You basically live for free for like 3 years, and you're learning to be a landlord. You're getting the depreciation tax benefits, the appreciation, the debt pay down, all of the benefits while getting to understand real estate. And you're saving up that cash reserves and that nest egg and those, all of the other things. And then when it comes time that you are ready to buy that, forever home with your family, one of the reasons that people say that, I think, is because like situations change so much. You don't really know if this is going to be where you live forever. You don't know what your family's going to look like, how big it's going to be. Like, you might think you do, but if you're buying a house when you're 2025, like, who really knows? So, you use this loan, you buy this house hack it, live for free, save some money, and really, like, I mean, everyone knows, or at least and I'm sure most of your audience knows, the value of that compounding at a young age is so much more powerful than 10 years later. Oh, yeah. So if you can start that now, then and then you can buy the forever home in 5 or 10 years when you have a better understanding of what your family is really going to look like.
Right. And then you have more money to potentially put into that forever home to customize it as you wish. Like, I'm not in the real estate space right now. I'm in REITs, real estate investment trust, but like, otherwise, like, I need to, and I've been talking about it for a long time, but that's one thing that is on my list to do when I'm down here in Atlanta is actually do that house hacking so I can eventually put it into maybe not forever home, but the next home. Yeah. Take advantage of all the benefits that Uncle Sam provides with real estate, which all about. I get questions often from my audience about like, hey, well, I don't want to buy right now because interest rates are so high. And I guess you covered this a little bit, just saying, hey, like, they're not as high as they used to be. But what would you say to someone who's like, hey, I'm going to stay out of the market, or I'm not going to actually buy a real estate property because interest rates are way too high, home prices are too high. It doesn't make financial sense for me.
I would just counter it like this. If you plan on living in that area for a long period of time, right, you're playing the long game. So one of like a myriad of things is going to happen. Either rates are going to stay the same, rates are going to go up, or rates are going to go down, right? I know it's such a shocker. But historically, rates are going to either go up or stay the same. The odds are less in your favor that they're really going to go down. And if they do, it's not going to be drastic. It's not going to be 2 or 3%, most likely in your lifetime. If it is, it will not be soon, I don't believe. And if it is, great. And that's incredible. But I would also say, why didn't you buy when you had 2 years of that?
Yeah.
What stopped you? Sorry. Don't actually believe that you're an action taker because you could have. You had your chance. So that's always hard for me to hear. I'm like, well, you had a chance. Why didn't you? And I understand there are financial reasons you might not have. If you have the opportunity now, you can always refinance when the rates drop. So what I tell people is, if the house makes sense, it is a property that makes sense as a future investment or as your forever home, and it is something that you would want to own regardless of what the number on the interest rate is. If the non-debt side makes sense, then buy it. Because if the financing part obviously shouldn't break the deal, right? But if the house makes sense with the financing and it was something you would have bought regardless, then buy it. Because if the rates stay the same, then okay, you didn't lose out. If rates go up, then you're going to be sitting on the sidelines even longer, but no, you locked the debt now, so you're good. If rates go down, then you can refinance and take advantage of a better rate.
Right.
And so you're not hurting yourself by locking that rate in right now.
Right.
But you might be if you sit on the sideline for the next 6.5 years renting. And there's nothing wrong with renting. I've rented even while as an investor. Sometimes that's a great option. I rented a place where they allowed me to sublet rooms on Airbnb, and I lived for free in a rental, almost for free. I think it cost me, I had a $3,000 a month lease on a 4.3 in San Diego County, Airbnb 2 of the bedrooms, and I was out of pocket for $400 a month. And it was great. So, I mean, there are ways to make rentals make sense for sure. I'm not knocking the rental side, but if your goal is to own a home or own rentals, or, as an investor, and you're stopping yourself because of interest rates, you could potentially just be sitting on the sideline forever, paying somebody else's mortgage down because of that thing. Well, over 7 years, just look at the amortization chart and figure out how much you would have paid down on your interest, how much 6% is the average appreciation of homes. So just run the numbers on how much your $100,000 would have gone up 6% a year over that time. So, whatever, 106, you do the math, 742 ish on average. I mean, let's cut it in half and say 121. So let's say you missed out on 21,000 in appreciation. And then
you're on sidelines for interest rates to fall when it's told you that's not going to fall, right?
Yeah. So let's say you missed out on 21,000 in appreciation and maybe only 5,000 in debt pay down. So 26,000 in net worth there, assuming no other variables, not including any depreciation tax benefits. And I think that's probably being conservative.
Yeah.
And that's for every 100,000 borrowed in theory. And then, oh, by the way, the alternative to that is you just paying someone's rent with absolutely no upside at all.
Right. So yeah, if you're going to be a real estate investor, just try to jump in as quickly as you can. To David's point, rates are probably not going to fall drastically anytime in the near future, and likely home prices are going to continue to climb. I mean, it's the same argument that I have with some, clients that will say, hey, I'm not going to get into the market right now. I'm going to wait until later. I don't think it's a great time to buy because it keeps going up. And it's like, if you keep waiting on the sideline and you keep your money in cash, if you keep your money in cash, you're guaranteed to lose your money because of inflation. But if you invest, the best thing you could do is start investing as early as possible. I don't care how much. It could be $1, it could be 10, it could be 100. I don't care. Just get in the habit of doing that so your money can grow and it can start working for you. Because if not, you're going to be working for the rest of your life. So once people understand that and they get into the market, they're like, okay, well, I see what you're saying. And likely we're not going to see COVID, prices of stocks, really ever, unless we have some drastic crash, which will likely not happen. I think it's the same way when it comes to real estate and interest rates, where I think there are a lot of people waiting on the sideline because they expect for money to be free again, where, the government, the Fed went through and they said, okay, well, we're going to do quantitative easing. We're going to make sure that interest rates are, as low as possible because we want you to spend. Likely it's not going to happen within our lifetime. Hopefully not within our lifetime. So you might as well just go ahead and jump in now because, to your point, it's a numbers game at the end of the day.
Agreed. Absolutely agreed.
Yeah.
And just for the record, don't buy a house just to buy a house.
Right.
Buy something that makes sense long-term as an actual investment.
Right. Yeah. And it might not even be your time. Because for me, I'm very clear, on my page, hey, I rent. And I rent because I have so much other things going on that I much rather rent. So I have the flexibility because I don't know if I'm going to be in Atlanta tomorrow. Something could happen. I would have to move to wherever. And I want to have that flexibility, or the fact that, I don't know, my garbage disposal the other day, wasn't working. And I had a bunch of other things I had to get done. I just called my rental office. They came in, fixed it for free. And in the stage of the game for me right now, it's definitely approaching the time where I want to have my own property, but right now is where I'm at. So that's why I'm in this evaluation phase. But when I tell you, bro, my neighbors are getting on my nerves, and I think I'm getting at the age where I want to choose who is my neighbor and where I'm at or whatever. The other day they were literally having a party 2:00 in the morning on a Tuesday night. I'm like, what is going on? And I just put in my head, Mark, you could just go buy a property somewhere that you choose and not have to worry about your neighbors. I guess you have to worry about them a little bit, but not as much. So
Nope.
Definitely coming of that age where I'm looking towards that. Though the way that I grew up, I had we had half an acre of land, and in the country, there were so many other people that had acres upon acres of land. So I'm like, God, if I could have, that would be amazing. I wouldn't have to worry about any neighbors besides the deer that come by. But anyhow,
I'm on, if you turn onto our gravel drive,
yep,
I've got my house on the right and we've got 10 acres. On the left, there's my sister-in-law on 5 and then my father-in-law on 400. That's quite peaceful.
10 acres. So I was looking at something the other day. I was trying to visualize what an acre truly was. And someone on the internet, let me make sure I'm not misquoting this, but I believe they said you have a football field, multiply a football field by 3. So 3 football fields is 1 acre.
Sounds
right?
About right.
You multiply that by 10, that's how much land David has. That's a lot of fucking land. Who's mowing your grass, brother?
I've cows.
Is that a write-off?
So we, yeah, actually, we have, let's see, if I'm trying to cut the property line into, so a third would be, doing the math in my head, probably about a half acre of it actually gets mowed, and then the driveway mowed and weeded, and we have a little John Deere ride on, but the rest of it, yeah, we have cattle. We have 9 right now that graze it, and it's fenced in. And then, yeah, we have a 4-wheeler, a big old burn pit, and
wow,
man, I got a flamethrower and a bunch of guns, and living the redneck dream.
Yeah, man. I have my thoughts on St. Louis, but I might have to visit your area one day.
Springfield's good. We're good.
Springfield's good. Okay, cool.
Yeah, we're the headquarters. We're the headquarters for Bass Pro, O'Reilly. Yeah, we got some good stuff here.
Okay, cool. Because I miss that, man. Like
we're not the murder capital. Maybe the meth capital. But not the murder. We're nice.
Yeah, nice people. But yeah, I mean, growing up, I grew up in the country. Like my audience knows that, and like that's what I miss. I miss having land, and I mean, we didn't have that much, but land nonetheless.
Enough.
Where you can mow a grass or just throw the football outside or have a cookout, whatever. Have a bonfire if you really want to. Park your car, truck, whatever on the grass, whatever. It's your land. So, and definitely looking forward to one day, maybe not living in the country or, somewhere where it's like away from a city, but actually having an investment property out in the woods just to like get away. There's no better piece than going out there. Your cell phone doesn't work. I mean, I'm sure you have all that access where you live, but like in a deep cut where it's like gravel roads and all that, that's definitely like what I miss, just getting away from everything. So that's super dope, man. For any of the new home buyers, like people are like, I'm ready. I know how to evaluate a property. I know where to buy. I'm ready to go. Like, what are like maybe 3 tips that you would leave first time home buyers with? What takeaways do you want them to walk away with when it comes to just buying it, their first home?
For one, for the love of all that is holy, do not just work with a friend or family member as your real estate agent. Please. I'm not going to tell you to hit me up and I'll refer someone to you because I don't care enough about my little referral thing to do that. But just don't. This is quite possibly the biggest purchase you're ever going to make. And for some damn reason, people are like, but it's my friend. But it's my family member. They have a license. They said they love me. You're right. That's great. Are they a full-time agent? Are they like, is that their career? I say this jokingly, but the number one, like I recommend people throughout my community all the time. The number one reason that people don't use one of the agents I recommend is because they have a friend or family member in that area and they would feel bad not going through that friend or family member. 90% of those friends / family members has a license, but also a full-time job. I'll tell you this. I've had my license since 2018. I've never sold a freaking house. I will never sell a house. I don't know shit about the market. If you came to me and was like, bro, I'm moving into Springfield, sell me a house, I'd be like, fuck you. Go talk to Wes Litton. He's the best agent in Springfield, Missouri. He'll sell you a house. I don't know anything. I don't know how to negotiate. I don't know the market. I don't know this, that, and the other. And if I was really your friend or family member, I would tell you I'm not your best option. And I would just introduce you to someone and take 25% of their commission because that's what I'm legally allowed to do as a thank you. I'd still make a little money, but you'd get better service because they go through this friend or family member because they feel guilty. And that person has no idea what they're doing. And they get just obliterated in the market because they have go through like a top-notch quality agent who's a professional full-time agent. It is like absolutely when people say, oh, agents make 3% for doing nothing. No, you just used a bad agent. Like a good agent makes that 3% 10 times out of 10. And as a buyer, you don't pay it. So who cares if they make a commission?
Yeah. I think that speaks to the importance of like finding the right agent and people that you connect with that is not a family member, right? Like,
yeah.
There's a few agents that I have like on my list of agents that I want to reach out to. And I have that list from actually going through a bunch of people that I was just like, I don't connect with this person. I feel like this person doesn't have my best interest in mind. This person knows nothing about Atlanta, like at all. Or they claim they know about Atlanta, but they actually know about this random suburb, but that's pretty much it. So you should definitely do your due diligence and vet out the different agents that you talk to. Anyone can come into your inbox and say, hey, like I could sell you a home, but you want to make sure that person knows what the hell they're doing. And I've also heard that you have some agents that have partnerships with like different lenders as well. So you want to have someone who I'll let you.
That could be huge. What I was going to say on the lender side for, I guess, point number 2 would be don't get so wrapped around the rate. Rate is important. Don't get me wrong, but APR, right? For one, not just like interest rate, like the total cost of financing is more important than the interest rate. People get you with that, with all the fees they bake in. What is more important than the rate is the ability to close on time and the service, right? Like big bank lenders can compress the APR a little bit and be like, ooh, look, we'll get you a better rate, but they won't close on time and they will have terrible service. And that's, in my opinion, worse. Like, I will pay an extra half a point, not a half a point, but like 0.05% or 0.01, you know, whatever, like tenth of a point on a loan, because it's like nothing monthly. It's like $5 a month or whatever it boils out to. I will pay that all day to know that my loan's going to close on time and painlessly.
Right.
So, you know, just make sure that when that agent, like, they'll know who the good lenders are, and they're not going to come back and say, this is the best interest rate. They're going to say, this guy will fucking close your loan and will actually get to buy the house. The seller won't walk away on you.
Yeah. And that's how you know you're dealing with quality there, whether just talking about the benefits of working with them instead of just focusing on the number. Because you're right. Like, people focus on a number so much. In the grand scheme of things, it doesn't really matter. Like, it kind of relates to, I was just talking to a client the other day. They were talking about like a high yield savings account that they're opening with like some random bank. And I was like, yeah, sure, you're going to get like a higher interest rate with that high yield savings account, but like, you could just use Ally, who's been doing it there like throughout the duration of their company, their history, and you know what you're going to get, and you know the quality, and you can go to an ATM and pull money out, whatever it might be.
It's not going to get turned off on you.
Say again?
The interest rate's not just going to disappear on you.
Exactly. And it's probably going to stay that way for a little bit, but you know what you're getting. You're going to the OGs of like high yield savings accounts or like Vanguard or Fidelity, whatever it might be, when it comes to your investing. So, don't get so locked in on the actual fee, and think about what you're actually getting for that fee. I think that's where a lot of people miss.
We got one last one, right?
Go for it.
Don't get emotional. Just
I won't.
No, that's the last one. Like, don't get.
Oh, that's it.
I
was like, okay,
about the home.
I thought you were gonna hit me with something.
No, that's it, man. Like, home buyers, dude, they walk through houses and they're like, oh, this is the home, and then sellers will walk all over you in the negotiation process. They'll be like, nah, we're not going to do that on the inspection. Take it or leave it. And if you don't have a good agent, so don't get emotional. Make sure you are not getting suckered on things. Don't be afraid to negotiate. It's okay to ask for concessions.
Yeah.
Treat it as a transaction.
That's a really, really good point. Because, when it comes down to big expenses throughout your life, it's going to be likely your car, likely your wedding, and also your first home purchase or home purchasing in general. And with each one of those, there's emotions that are attached, and whoever's selling you the car or the actual like wedding venue, whatever, they latch onto that. They latch onto it and they charge a premium. So, like, to your point, don't get emotional. Really think through what you're doing, and it's okay to take your time. Yep. And if the person who's selling you whatever they're selling you doesn't allow you to take your time, then it's probably not the best person. Like, they should be very patient with you as you're going through that entire process. And because they've done so many, they should know like what to say, what not to say, what to think about. So in my opinion, and you probably feel the same, like, your agent is probably one of the most important parts of buying a real estate property. Could really make or break your experience.
I agree.
So awesome. David, where can everyone find you online if they're like, I want to tap him with this guy, he really knows his shit?
Well, here's where I give that dope ass link that everyone's going to be able to remember. You ready for this? thebestpodcastguest.com.
Wow. Okay. Yeah. I guess I'm winning then, right? I got you on the podcast. You're a great guest, right?
I couldn't believe that domain was still available. So I bought that thing in a heartbeat. And that link will take you to a page that literally just has a link to download my other book as a PDF for free. And then it has a link to buy to where the Amazon link is for the planner, and a link to all my socials. And so it's just basically like a one-stop shop for like the book that we talked about, a free download of my first book, which obviously is like a email magnet, but really just like a place for all my socials, because I was like, man, I keep just telling people follow me on Instagram and nobody does because they don't remember it. So people will remember thebestpodcastguest.com because that shit's funny.
Yeah. So like, how did you, sorry, it's like a sidebar. Like, how did you land on that domain?
I was on a phone call with Brandon Turner and we were brainstorming domain names for when I went on the Bigger Pockets podcast. And he was like, what if you came up with like Dave and Rob, I love Dave and Rob, or like some goofy one just for that episode. And then I was like, well, what if we went down a rabbit hole and we were like looking up random domains. And I was like, what if like best podcast guest? And I was like, oh, that's not open. And I was like, what if I just added the in front of it? And I was like, that's open. And I was like, ta-da! And he's like, that's awesome. And so I was like, yep, we're buying it.
I'm gonna eventually want to buy that domain from you, and you'll get paid very well from it. Yeah, I'm in the game of like buying cheap domain names that are like really cool names. Like I own the Jordan year, so I thought people would want to buy that domain because it's 2023, the Jordan year, and no one took me up on it yet. And we're approaching halfway through. So if you're trying to buy that domain, go in and try to buy it. And,
I like it. I've got a bunch of random ones, but nothing too cool. But that's pretty.
Yeah. Fun. Anytime I think of like a really cool domain, I just go type it in and I buy it, no matter what the price is. Yep. Well, actually, I take that back. If it's less than $20, I'm probably gonna buy it.
Yeah, I've got
just to have it
because
you never
25 know. Different domains now on my same thing.
I was talking to someone who it's like his name is George. I would never expect that he would be a domain buyer or flipper. And I was talking to him and he's like, dude, I own like 1,000 domain names. I'm like, wow. And he was just walking through the numbers on like how much money he makes per year from that. It's like a game that's being played. Wow. That's what I tell like anyone that is looking to own a business or like, create a business, buy your domain name ASAP. Even when it's an idea, like, oh my God, like I love the name Betterwallet or whatever. Like just go and buy it, because when you try to buy it after some time, someone's going to scoop it up. There's people out there, and it's not illegal. Like if they want to scoop up the name, they can. But there are people out there that look for potential new businesses and ideas, and they scoop up the domains so they can get paid on the back end. So
I've been trying to buy the domain Military Millionaire for like 4 years because some jerko owns it. And he bought it before I created my website, which is why it's from militarymillionaire.com, because militarymillionaire.com was purchased, but he's never put anything on it. Yeah. So it's a 404 error. There's nothing.
Yeah, and the same way with Betterwallet.com.
I offered that guy $5,000 and he did not reply.
Yeah. The person who owns I actually found out who owns it. I'm not going to do anything to him, but They own it and they're asking for $5,000. And here's my thing. I think at a certain point, it's a business expense.
Yeah.
You know what I mean? Like, because they can say, okay, well, 10. But like in the grand scheme of things, when you're operating a business, especially if you have over a 6-figure business, like you just have to cut your losses and say, well, they have it, I want it, and I'm just going to pay for it. Unfortunately.
I would buy it if he would sell it. Yeah.
Yeah. So for anyone who's like, hey, like my domain is taken, but they're asking for a bunch of money. Like if you have it, I say buy it, especially if you're very serious about your business, because like after some time, $5,000 isn't going to bother you all too much, but you have to work up to that point. So I wouldn't have said this back in 2020. Absolutely not.
But I look at it, I'm just like, because I'm like, he won't even reply. I'm like, what does he think he's going to do with it? Like, because I was looking at it, I hired the GoDaddy guys this year to try to get it bought. And I was talking to one of their guys. I was like, okay, well, you can see domains. I was like, look at mine. Do you think, like, I was like, you're going to go negotiate with this guy again. So go talk to him. I was like, and just tell him, like, if he tells you like, oh, well, I'm going to do something with it someday, just subtly remind him, like, just show him my SEO. Because 200 episodes later, 800 YouTube videos later, like, I'm an 88 domain rank on Uber Suggests. Like, you're not touching that military millionaire keyword. It's not happening. I've got books named after it. I've got, like, good freaking luck, dude. So just give me the freaking domain.
He's probably like 10,000.
Yeah, it's like, but he won't even respond to tell me what he actually wants. Jeez. And I'm like, dude, if you want to like write a book, cool, like write it. I don't care, like whatever you want to do, just give me the freaking domain.
Yeah, that's like the worst kind of ransom, right? It's like you have the ransom where it's like they're asking you for the money, and then there's the others where it's just like, I'm not gonna say anything.
I've got your dog.
Yeah.
Well, what do you want? Your dog.
You got it. Awesome.
Too funny.
Man. Oh gosh.
But cool.
This whole back half of the podcast, people are like, "What are these two guys doing?"
The bloopers. I mean, we're talking for what, like 30 minutes
I
to
know
an
we
hour.
probably talked for 30 minutes before we hit record.
Yeah. So we just love to chat back and forth. But as I mentioned, going to conferences and going to certain like networking events, like you get to meet like great people and people that you can say, hey, like they're your friend. And David, I appreciate your friendship over the years and helping me with like my business journey. And let's keep it going, man.
Absolutely.
For all that you do.
You too, brother. This has been
Thanks
fun.
for coming on. And guys, that's the end of the episode. I'll see you guys next week with a topic that I'm not sure what we're going to talk about, but we'll get on that and I'll see you guys then.
Thanks for tuning in to the Better Wallet podcast. Make sure you subscribe to the show wherever you listen to podcasts. And if you found any value, we'd appreciate a rating and review.